All right, guys, I'm going to show you how just using fair value gaps, high time frame, bullish gaps, bearish gaps doesn't always hold your bias up. And this is going to be a precursor to a video I'm going to do on how to calculate your bias for the day. You see, a lot of ICT traders use bullish gaps and they weigh them out against bearish gaps to see what their bias is. If it's trading in all bullish gaps, their bias would be bullish, and they would add up the bearish gaps on the other time frames, and they would do a count and see which ratio is higher. So in this case, we're going to be talking about Wednesday, October 22nd. So we have this 4-hour bullish gap right here, which is also a 1 hour. You have a 4-hour gap down below, which are also 1 hour gaps, but we're just going to talk about the 4-hour gaps and look at it on the 1 hour to make it easier. And then you can see that we have a daily fair value gap that was formed and closed on the Monday right here, creating this gap right in here. So back on the 1 hour here, the main part of the narrative of why you don't just use fair value or just using any high time frame fair value gap to decide your entire bias, there's other criteria that you need to consider. So this green line right here is the start of Wednesday, and that is the day in particular that I'm talking about. We're just talking about this small little window right in here in the 1 hour. So basically between this green line and this red line. All right, let's move forward here. So the first thing you want to do when you are considering a trade is you want to consider what has happened in the premium and what has happened in the discount. So in this case here, you can see that on Tuesday, it came up and made an all-time high right here. This is the all-time high. So it made an all-time high very, very early in the week. Now, I'm not saying that price can't remain bullish and come and make another all-time high, and that's fine if it does. Edge. So to be able to understand how to do this properly, you first want to look at what did it do in the premium. Now, if it took out London highs in the premium or a session liquidity, I understand it could come back higher. It could come into this bullish PD array right here, and it could go higher. Now, if you look at this range right here in the 1 hour, the lows here to this high up here, and you can see that below the 50% here is where a lot of buys happen. And this is where a lot of the fake out buys happened right in here too. So it actually really is pulling back to BD array. But when you have a major event like this, an all-time high being taken, and it pulls back in the PD array, you need to consider one thing. Has price finished its job in the premium? Number two, are there other high time frame fair value gaps that it could pull back to lower? You can see here it pulls back to a 4 hour, blows through the 4 hour. All price in this case did was pull back to a daily fair value gap. So here's our 7 o'clock close of the 1 hour, and that is only about 200 points away. No problem for the Dow to move that amount in one day or in one morning. So you need to consider that price may want to pull back deeper into a discount, and we rebalance in this daily fair value gap. The higher the time frame fair value gap, the more likely it is to come rebalance inside of it. You can see right here, it sat right on the edge. I guess it doesn't really run on an algorithm because that's just buyers and sellers did that, right? What you want to do in this scenario is ask yourself, you need to have patience here, especially with CPI coming on a Friday. I don't think it happens on a Friday too often. We've had Fed news folders. You want to wait for one thing, and that's inversion. You want to see what price is going to do first after it's already done a major job, like taking a daily previous high or an all-time high. Okay, those are the two criteria that would finish its job, major job in a premium or discount. So in this case here, you can see this candle right here closed at 7 a.m. We've inverted this fair value gap. So all one would have to really do is wait. Now, I was expecting price, as soon as it inverted this fair value gap right here, I was now expecting a continuation model. So we've inverted it. I would like to see price come up, go into this bearish gap here for continuation model this way. However, price did not feel the need to come up into this fair value gap here after inversion on this candle right here. And it actually decided to come right down to where I thought it was going to go, into this daily fair value gap right here, bullish, this big blue box here. I was not interested in taking any buys. In fact, I told several people that it was just going to hang around in this fair value gap all day and all night, and that's what it did. You can see for the last 2 hours, it put a fake out in, came down, took it. Now, why is it doing that? I'm not going to get too deep into it. It's doing that because there is no red folder. There's no red folder to do any movement serious at that time of day. Hence why I only trade the first 3 AM macros. Now, is it possible that price stops in this bullish gap like you're taught? You can see it even sweeps the London Asian lows, like both London and Asia lows right here. Now, is it possible that even without a red folder, we come into this bullish PD array and come up and take the London highs and then go down? I am waiting to see what happens after major event happen like this in the premium. I want to see if it will give me a deeper discount. The whole point of this video is waiting for 1 hour, especially because it's going to happen faster, to be inverted. So, takeaway of this video, number 1, when a major event has happened, like sweeping all-time highs in the premium, we want to wait for inversion. Number 2, we want to look at, is there another high time frame fair value gap that price would love to come back to? In this case, you're trying to get into buys right here, right in your first AM macro. There's another 4 hour right here below it. There's a 1 hour. There's a daily fair value gap down in here. So you trying to get in up here on the leg of the move just because it's a bullish fair value gap in your buys tells you that you're not looking at the overall picture. So quickly, we're going to move down to the 1 minute right here in the first AM macro and the second AM macro and look at the series of fake outs this thing did. Okay, here we are in that 4 hour bullish fair value gap on the 1 minute. You can see here the price slid down to the bottom of the fair value gap. And we have on this candle right here, clean displacement over mitigation block. We even have clean displacement over bullish breaker block right here, eliciting a buy model right in here. And you can see it comes up and it fails right here. So that was attempt number 1. Another thing besides your bias that I want to bring up, do you guys see the green line up here? That green line is liquidity. Okay, that was the London and Asia low. Now, they weren't external, but they were still London low, which holds significant value. Now, if you take your ruler out over here and you put it on that green line, and then you bring it down to the bottom of the range here, you can see that price moved 96 points past the point of liquidity. That is too deep into the liquidity pool. So you have your bias, which you need to wait on, because it's not just about high time frame fair value gaps. I'm going to keep repeating myself. And you can see it's come too deep and everything has failed. Now let's move on to the second AM macro to show you another fail. So here we are in the second AM macro right here. And you can see what has price done. Well, we've swept the lows right here on this right here. We have a form of displacement over this breaker here. So we have market structure shift. Now we have another displacement above this breaker here with an entry on this wick right here. And you can see, what does price do again? Comes down and fails. There's your 2 attempts for the day. So you can see it's clearly engineering liquidity. On the 1 minute, it's all this noise here. Back on the 1 hour where it makes sense, you can't even see that noise here on the 1 hour. Let the price tell you where it wants to go. Have a monitor that stays on the 1 hour so it all makes sense. You can see all it wants to do is go right back into this daily fair value gap. We have an all-time high, so it's finished its job in the premium range. We were too deep in this London Asia low liquidity pool. We had a major high time frame fair value gap like the daily already created, and price just wanted to rebalance itself in it first and then go. So we're going to wait. We're going to go live tomorrow morning. I only have one little trade in for the entire week live. That was on Monday. Friday, we'll be going live once again, and we will see how the market was going to react to the CPI numbers being released. So any of this makes sense to you guys, please give me a thumbs up in the comments. And also, if it doesn't, please comment in the comment section, and I will get back to you and I will explain this in greater detail. All right, folks, have a good one and see you tomorrow morning.